All right, we've got a market that's absolutely ripping higher and it's getting ready to give an extremely bullish signal. One indicator that I'm going to highlight for you guys today, it's called the golden cross. And yes, it's very, very bullish, but there's some things about it that you need to know. I'm going to explain to you what it is, and I'm going to explain to you what normally happens after a golden cross occurs in the charts. We're going to be looking at some hot stocks, some that are hot and some that are not. Obviously, we got to talk about Nvidia making a brand new all-time high. It's absolutely on a heater right now, and I don't think it's going to slow down. I'm going to give you some clues that I see in the charts for when it did something similar to what it's doing now and why I think it's got 2 or 3 or 4 more days to the pump of the upside. And we're going to be talking about some other hot stocks. One of them's brand new. I've never shared it on the page. I'm calling it a bonus play. It's going to be at the end of the video. Make sure you watch the whole thing. This is going to be a great show for a market that's on fire and moving to the upside. This is the Stocks with Josh show. Thank you for joining me. Thank you for smashing the like. Thank you for dropping a heart and saying hi. Hit the like and subscribe if you need to learn the charts and you need to understand why Wall Street does what it does. I try my best to explain it each and every day. Okay, thank you guys for watching the video. Let's talk about Nvidia. So I'm bullish on Nvidia, and I've been bullish on Nvidia, and this is one that I have been holding my winners longer, but I think we're getting close to the point where it's going to hit a top and it's going to fade that top. So if you're trying to guess the top and short the top right now, you've got a couple days of pain ahead of you because this thing could continue to gap up and climb over the next couple days. I wanted you to be aware of the fact that the markets are hot. You know that part, but I think they're going to continue. Right now, the markets are ripping higher because the markets are very close to this golden cross. And after we get that golden cross, I'm going to share with you up front, characteristically, the market will fade a little bit. But getting this high on the S&P 500, and I've talked about this in the last month, we've clearly confirmed on the monthly time frame a market that's going to continue to climb and get up into the 620 to 630 range. I mentioned to you guys yesterday some big analysts who are confirming or calling it out to 650 to 670. That's what a true blow-off top on Wall Street would look like. Before we get into all of that, I also wanted to talk to you guys about the Stocks with Josh Pro Trading community. Easy to trade the markets today when you've got A-plus scalp trade setups that I give every single day, 30 minutes before the market opens. These are solid trend lines for a breakout or breakdown scenario. Obviously, today we had some breakout winners and made some cash. Let me know in the comment section if you took the trade and if it paid you today, if Wall Street paid you. I saw in one of the comments yesterday on YouTube, someone shared with me that they had blown up their account. And you know, it doesn't matter how many years I do this or how many times I hear that, I still have a ton of compassion for the person that dreamed that they could take a seat at Wall Street and end up getting chewed up and it feels like spit out. But I can tell you right now, you can begin again. You can start over, but I'm going to tell you that you'll have the same result if you don't change what you're doing. And what I would recommend is getting a trade plan and a risk plan and a take profit plan, because your emotions run wild and they cause you to do the opposite of what you should be doing. Most people are trying to get rich too quick. What I do every single day, 5 days a week, is I set up these A-plus scalp trade setups with the goal of taking a fairly decent position and booking a 20% win. And if you do that consistently every day on Wall Street and it works out for you, you'll get rich, I promise you. www.stockswithjosh.com to sign up and join ChartGoat University, the Stocks with Josh Pro Trading community. And tomorrow, Friday morning, I'm going to live trade with the family. Get in there today and join us for tomorrow. Let's see if we make some money together. All right, I have to talk briefly about some entertaining news, some interesting news. Of course, who's going to be at the center of it? Well, Trump and the Fed. Man, he's hitting hard on the Fed, looking to fire the man. Let me quickly play this small clip that highlights the way he feels about it.
I know within 3 or 4 people who are going to pick. I mean, he goes out pretty soon, fortunately, because I think he's terrible. I think he's a very stupid person, actually.
Powell declined today as he has over 2 days of testimony to respond to the political attacks and stuck to his insistence the Fed needed to wait and see how much tariffs boost inflation.
So I'm not even going to react to that today. I want you guys to react. Tell me what you think about Trump gunning after the Fed. Is the Fed doing a good job right now, a bad job right now? I did appreciate something that I heard on CNBC. One of the analysts said that we have to analyze right now the impact of which would be a bigger mistake. Would it be a bigger mistake to cut right now? Or would it be a bigger mistake to hold the rates higher for longer? Well, if the economy is strong, it would be a bigger mistake to cut right now. But if there actually is weakness in the market, it would be a bigger mistake to hold them higher for longer. The big problem with this whole conversation and the demand for rate cuts that I see is that we've got a market that's at all-time highs and breaking out, and a ton of analysts who are talking about a Goldilocks environment and the fact that corporate earnings ahead in Q3 and Q4 are looking pretty good right now because the AI story is 100% intact. I want to hear what you have to say about it. The bottom line is the markets are climbing today, and that's not good enough for Trump. He wants those rates lowered so that everything can go screaming higher. It would help all of our portfolios if the Fed got more dovish. Okay, let's talk about the golden cross. We're not just seeing a golden cross on the SPY, we're seeing it in a ton of stocks right now as well. But let's just talk a little bit about what a golden cross is. It's when the 50-day moving average, which represents short-term momentum, had been beneath the 200-day moving average, which represents long-term momentum. It's when the 50 crosses back above the 200. It typically signals that the trend has gone bullish. But, and there's always a big but in the room. One of the things I want to break down for you guys is sort of the history of how the market performs after it has received a golden cross, because that gives us some confidence as to how bullish we should be right now. And overall, it's good. It's good bullish history, but let's break it down to get to the specifics. The last 7 golden cross moves produced these returns. Back in October of 2010, after we got a golden cross, in the next 2 months, the market went up almost 15%. That's pretty good. January of 2012, after we got a golden cross, the market went up 6.2%. That's not bad either. February of 2016, we got a golden cross up, another almost 6%. April of 2019, a solid 4% gain in the next 2 months. July of 2020, a near 12% gain in the next 2 months. February of 2023, it wasn't the hottest. That one was only a 3% gain. And in March of 2024, after the market got a golden cross, we actually got a little downturn in the next 2 months, but it was barely 1.6%. So overall, when this technical event occurs, it's extremely bullish for the markets, and it's occurring this time right when the SPY is at all-time highs, which means the market can move quite a bit. Now, here's the biggest picture view that I can give you. Let me see if I can explain it to you. One more technical on the golden cross scenario. In back testing golden crosses, in the last 33 that have occurred since 1960, they showed that over the next year, or roughly 350 days, 79% of the time, the market went on to make an up move. So right off the bat, the sheer majority of golden crosses, 80% of the time, produce a market that goes up and not down. Now, this is where it gets a little bit interesting. I also wanted to figure out how many times after a golden cross occurs does the market pull back one more time to test the 50-day moving average. Now, this is something I've been talking to you guys about, that we're overdue for a small correction, a back test of the 50-day moving average. I talked about this inverse head and shoulders pattern, which has yet to form. The right shoulder, if it did, it also would give a very strong bullish indication of a market that wants to go much higher, possibly that 650, 670 that some have been calling out for. That's not my prediction. Right now, I've predicted a move to around 620 to 630. But The probability is that between 60 to 80% of all golden crosses have resulted in at least one retest of the 50-day moving average within a 60 trading day window. Okay, so here's the big picture view. The market very likely is going to go on to hit those higher targets like those 620, 630, 640 that's getting talked about right now. However, before that happens and after the golden cross occurs, we're also very likely to get a pullback and a back test of the 50-day moving average. And this truly would be your very last best opportunity to get in 2025. And that pullback or that back test typically happens in the first 60 days after you get the cross. We're very close to the cross. I think that cross may be here in the next week of price trading action. And the very minute we hit it, I just want to warn you guys, don't be the ones that literally buy the tippy top of the Magnificent Seven. We're going higher, and I think we're going to have some gap up days ahead, like I mentioned with Nvidia, but don't be the guy that buys the tippy top. We're going to have a bullish run, but we want to be the guys that buy on red, especially on a pullback to the 50, because 60 to 80% of the time, it does pull back to the 50-day moving average after a golden cross occurs. So what does the pullback range on the S&P 500 look like it could possibly be? Well, it could go as low as 570 to as low as 590, which means it may not go lower than 590, but that's your range where it could pull back and bounce and still be in an absolutely strong bull trend market that's been confirmed on a high time frame. So don't expect the markets to always go up. We're in an up run right now. As soon as that cross occurs, you want to be looking at taking some profit, right? Because we will get one more opportunity for a pullback. That's one of the main messages of today. 80% of the time, the golden cross means higher highs in the course of that year. Near 80% of the time, you get one more back test of the 50-day moving average. All right, let me highlight some other stocks that I wanted to talk to you guys about today. I'm going to give you a bonus play, and we're going to briefly highlight on Tesla, but I wanted to talk to you guys about Coupang, cpng. This one's hot. I want to show you guys that chart. Let me take you over there real quick. All right, I want you guys to have this target because this is one that's absolutely been on a heater, and I think it's going to continue to pump. It's really done a breakout move here, and we're going to see a gap up into this $31 to $35 range. I want to highlight for you guys how significant it is that it breaks over that psychological barrier of $30. That's going to be your signal. Right now, it's sitting at $29.92. So watch this carefully for a close above $30, because if cpng Coupang gets that kind of a move, then it's going to jump into this 32 to 35 area. I think 35 is very likely the end destination of this current up move. I wanted to put it on your radar. Guys, this one's hot and it's definitely moving higher right now. We have to talk about Netflix. This is one that I've been talking about since Monday. It's Thursday, and all it's done is go up. I want to give you guys some high targets. I want to point out that this is called a bald candle because the top is flat and there's no wick on it. And that's a bullish candle, a breakout candle. And I also want to point out, very similar to Coupang, that we're at this huge psychological level of $1,300 on Netflix. And if we can close above it, and it sure does look like we are because it's sitting at $1,304. Now, this thing was $1,295 when I was preparing my video notes, and I was trying to get out here and make this video fast enough to let you guys know that this thing is still running. Hold it, hold it, don't sell, because if we can close above $1,300 today, then a very realistic target is $1,330. And as I've said, I see some big tech movers getting ready to make their blow off top as the markets have that golden cross move. And so 1330 is my lowest target right now for Netflix if it closes above 1300, and 1350 and even as high as 1400 is realistic in this environment. Now, nothing I say is a recommendation for what you guys should buy, sell, or hold. I'm assuming that you're paper trading. I'm sharing with you what I'm doing with my money. Let me know if you've had the courage to hold your Netflix. Or I had a guy say to me the other day when we were live trading, he said, Josh, I've never live traded and got a 40% win on some options. You know, it's hard, it's scary. You get up, 10, 15, 20%. You want to lock in the profit. But because he was live trading alongside of me, it gave him the confidence to hold because I told him I'm holding, I'm not selling this. We've got a target. It's going to hit my target. We went on to make 60% on that trade. And that was 60% on $8 options. If you had taken cheaper options, you could have gotten 100 or 200%. But the bottom line is we're holding our winners right now. Nvidia, brand new all-time high. Netflix, beautiful all-time high. These are likely not going to slow down. I think the soonest I see us topping off right now is Tuesday to Wednesday of next week. Do I have a crystal ball? Can I guarantee that? Absolutely not. Things are getting hot, but I'm personally not motivated to sell anything when we're getting gap up days. Let me know what you guys think. What are you doing right now? Now, let's go look at the Tesla chart. I think you guys will find this very, very interesting. All right, we've got the daily chart up. We've got the indicator outlining the golden crosses and the death crosses here. And it looks like Tesla's in a very similar position as the SPY is right now. It looks like it's getting ready to have a very strong golden cross. And, for all respect and purposes, this would seem pretty bullish because the last time it got a golden cross right here, it shot up all the way from $200 to $480. So why might we not think that this would happen this time? Let's go back in history and see if it's ever done anything like this before. And oh my goodness, the last time we hit an all-time high at $415 back in 2021, we end up, of course, at that point creating a death cross, and the price consolidated, came up off its lows, rocketed back up above the 50-day moving average. And in this scenario, people were thinking that we were ready to go all the way back to all-time highs. And the yellow line came up right here, and it kissed the red line. Remember, that yellow line is the 50-day moving average getting ready to cross over the 200. And instead of crossing, it turned down and ended up leading to a massive capitulation moment, bringing Tesla all the way down to $102. Now, remember, let's go back and just define what we just talked about, okay? Everyone's going to think I hate Tesla. After we made this previous all-time high, the 50-day moving average represented by the yellow crossed beneath the 200, giving us a death cross. And then it looked as if it was going to cross back and give us a golden cross. But instead, it turned lower, failing to cross, and share price dropped all the way down from $290 right here all the way to 100. Now, let's go back to the present. So very similar situation. We had this recent all-time high of $400 and roughly $80 to $90. The 50-day moving average, of course, fell back beneath the 200-day moving average, the yellow line under the red line. Here we are right now with the yellow line getting ready to cross back up above the 200-day moving average, the yellow line being the 50. And for all respect and purposes, if that happens and it closes and confirms, it should signal that we might go all the way back up to 500. But if history repeats itself and the 50-day moving average loses momentum and turns down, this could bring the price of Tesla all the way back to this prediction of 180. 180 is your new prediction from me. Now, I know that I'm just making all of the Tesla lovers, which I have been one and am one. I love Tesla, make money on Tesla. I made money on the Tesla ATM today. It's going to make people upset. It's important that we follow the charts. I've never presented anything different to you on this show than I am a trader who follows the charts, which simply means that if that yellow 50 crosses above that red 200, it's a bullish signal for Tesla. Now, the second thing that we would need to see to accept that as a trend confirmation and not a fake out is we've got some price points we got to get above 327 and then really above 350 at a minimum. And we're not back in a bull move until prices above 360. So we can continue to vacillate in this area. If this is going to be bullish, we've got to see the golden cross on Tesla. And if this is going to repeat the past, then we got to watch for that yellow line to begin to curve over. And that would lead to a huge drop in price that I'm predicting won't just end at 250. 250 will just be a spot that it stops along the way. The ultimate move, if Tesla cannot regain its ground right now and get back above 350 to 360, the ultimate move down could be for a crash move as low as 180. And that's not going to happen overnight. And there will be stops along the way. I'm just saying that in 2025, that's very possible. And this is perhaps this next week, the most important week for Tesla price action in all of 2025 and possibly 2026. Now, I know I've been getting, some disgruntled comments from the Tesla community. All I'm trying to do is to take a look at the bear case. If you're bullish on Tesla and you don't ever look at the scenario, the bearish scenario from a technical perspective, I don't think you are doing your investing justice. I don't think you are weighing things correctly. You got to look at both sides of the case. And I'm giving Tesla the chance. It can reclaim that ground and it can give a golden cross. And I'll be the first to come out and tell you, yay, we got the golden cross. Let me know what you guys think about Tesla. Tell me what you think is going to happen to the Fed. Is he going to get booted, or is he going to continue to direct rates for the U.S. over the course of 2025? I'd love to get your guys' opinion. But no matter what, we're holding our winners longer. We're taking the trade. The markets seem to be poised for a beautiful up move, but we're going to keep our eye on it because that SPY has not yet printed the golden cross. But if it does, based on today's video, you guys have a little idea of what to expect. Hit the like and subscribe to get the follow-up commentary on this video and future technical analysis on these hot stocks. I'll talk to you soon. See you in the Discord. Peace and blessings. Take care.